Thanks for tuning in to another episode of My Next Property. My name is Steve Ash. I'm the founder of Property Strats. I have an 18 mil portfolio and we're helping everyday Australians achieve the same. So we're going to do another episode in our series of above 700K to buy in Melbourne and below 700K to buy in Melbourne. So I have Theo here again with me. Theo, how are things?
Going well, Steve. How are you?
No, I'm very good. Thanks. Very good. It's good to have you up here. Like now, you're obviously one of our guys who's heavily looking at the Melbourne market and identifying deals. So I think it's great to have you on this pod because you can really bring that sort of fundamental sort of like approach to looking at one of these suburbs today. So it's really good to have you in.
Yeah, I'm excited to have the conversation.
Yeah, awesome. So the area below 700K, we're going to talk a little bit about Melton. And then secondly, we're going to talk about Narre. So to start with, maybe we'll go into Melton. Are you happy with that, Theo?
Let's do it. So Steve, do you want to take Melton or Narre?
I'm going to throw you under the bus. I'm going to have you do Narre. I'm going to do Melton because I've already done a lot of prep work on other podcasts before. And so I'm going to cheat.
Role reversal. Let's do it.
Let's do it. So Melton's an area that's actually been doing pretty well in 2025 so far. In fact, I think, that although the data lags, I know we've been seeing a 5 to 10% growth in a number of the areas that we've been looking at. And there's a number of reasons really why behind it. So Melton's an area of 40 Ks northwest of Melbourne. So really one of the key things I wanted to highlight really is population growth. And population growth in Melton has been 6.6% year on year or in the last year. And it's been one of the best performing areas in Australia. And really one of the key things behind that is really affordable. You're close to obviously a major area in Melbourne and it's very affordable. And vacancy rates may be a little bit on the higher side, but no, it's very cheap prices. You can go to, say, Melton West, and you can pick up sort of properties on, say, 750 square meters of land. And in January, February, you're picking those up with a 4 in front. So there's a number of good suburbs, and we'll unpack that in a second. But there's been quite a few infrastructure upgrades in the area and or planned upgrades. We should see more increases come to Melbourne. Like there's been the rail upgrade, so that's due to be completed by 2027. And then you've also got the Westgate Tunnel. So basically from a rail point of view, going to be a lot easier to get to the city. And then sort of from a commute sort of point of view, just being able to get around the CBD is going to be a lot easier. We also have the Coble Bank, all the work going there with the hospital upgrade. That's going to create several jobs and that'll uplift the general surroundings there. And that'll be a bit of a boom for the area. I just population growth and all these infrastructure works. I see a lot of plus points to Melton.
So it sounds like Melton is earing along the lines of an early stage growth corridor. Is that correct?
Yeah, it is. So obviously talked about the planned upgrades, but really Melton's a big area. And sort of if we look at some of the population numbers at the moment, there's about 241,000 people there. And the forecast by 2050 is 440,000 people there. And it's not all of Melton, not all of Melton's created equal. But so what we see is...
So let's jump into that because I think everyone's interested. Not all of Melton is created equal.
Well, yeah.
What parts do you think are better?
It's a good question. So I think the further we go out west, there's a bit more supply and land out that way. And so north of Melton, a couple of areas where, and to the west, really quite nice areas. You've got the likes of Kurrajong, it's sort of like the median's just a little bit more. So we've got 560,000 here. I'd say it's tracking a little bit more above that. We've also got Harkness, which is just towards the side of 561. But it's two very similar suburbs. You've got maybe newer type properties in Harkness on smaller sort of plots, but they're not desirable, nice place to live in Melton. You've got Melton West, I just talked about, with the bigger plots of land there, nice houses and lots going on there. So I'd say those sort of pockets are really good and there's good opportunity there, sort of subdivision potential. If we then break it down and look at sort of Melton and Melton South, so Melton itself has got quite a good opportunity, vibrant high street there. Some good areas around the high street where you've got some pretty favourable zoning, residential growth zones, so you put commercial assets on there, townhouses, apartments, what you will. And then if we look at the long-term growth rates of these type of areas, like Melton's like 7.2% over the last 10 years. So we think about Melbourne not doing too much over the last 7-8 years, but Melton's been quietly chugging along in the background, doing quite well. Melton West has done 6.7%, Kurrajong 6.8%. But if we look at Melton South, which is maybe you could say a little less desirable than the rest of Melton, like growth rate over the last 10 years has been 8.1%. And that's really, we're starting from a low base, prices were quite small there. And so that's really knocked it out of the park. So what we're talking about here is some of the highest long-term growth rates here. There is a bit of vacancy in these areas, and I think Melton South does run at a 4 to 5% vacancy rate. Yields are maybe, even though the price point's a little bit on the lower side, the yields are still a little bit low. There has been a bit of investor or buyer's agent sort of buying in these areas, so we are seeing a little bit more sort of vacancy on the market, and rental growth might be a bit stinted, or if that's the word, in the short term. But I think from long-term play, when you look at these prices and you can sort of compare, are very comparable to the likes of Ballarat and Bendigo, I think there's really good opportunity here.
When you talk about long-term play, are you talking about a 5-year horizon, a 7-year horizon, a 10-year horizon? What sort of outlook do you mean when you say long-term?
Well, I always think long-term from an investing point of view. I think with property investing, we're going to do a pod on this at some point about, there's a lot of talk about short-term holds, trading the market, maybe getting the gains and then kind of recycling that into another market. So in any sort of type of property investment, as you know, you're a successful investor yourself, needs that long-term hold. Like Melton's a good one to put in the portfolio because everywhere's a bit skinny on the Melbourne side, to be quite frank. But so 4%, but the buying price it's affordable, and you can potentially pair that with another asset with a cash flow play. I think it's a really good sort of asset to hold long term, and it's good for the portfolio mix. And so one of the things that's kind of stymied at Melton quite a lot is that there's loads of land all around Melton. Is that going to impact prices? Well, there's no sort of applications gone in for subdivision on these areas just yet. And so at the moment, I think Melton's pretty protected from a supply point of view, especially in the suburbs I've talked about. So it's definitely a question, and we get asked a lot about all of the land. But I think almost the best case scenario is if someone does take those projects on, puts the subdivision, gets the building approvals and goes through. I think that's going to be a 6 to 8 year cycle. And by that time, you'll see in those land releases, there'll be 300 square meters, maybe 400 square meters, and you're probably seeing pretty expensive land prices. So all that's going to do is going to be really good for those established blocks. And so if we look at it from a cycle point of view, I still think we're buying close to the bottom of the cycle. It was around this time last year was probably the ultimate time to get in. You were still buying in those low 4s, and now we're kind of like mid to high 5s. But still, I think there is a little bit more to come.
Sounds like you're saying there's a bit of a value catch-up versus broader Melbourne area. Is that what you're getting at?
Well, I think Melbourne is in catch-up mode anyway. I think Melton, and I might have twisted my words a little bit here, I think Melton's actually outperformed a little bit what Melbourne's done. And I know it's kind of roaring. Like we see it every day with the off markets that we get now, and even the property on market now, we're talking 580 to 600. So the market's moving for sure. And that's why I'm enjoying doing this series, because we're trying to sort of talk about, there's a different investment thesis for, say, buying in Melton. If you're wanting to scale a multi-portfolio, you want to get quite a few in, then Melton makes a lot of sense. If you just want to buy 3 to 4 properties and high quality assets, then Melton might not be the case. In fact, the suburb we're going to talk about in a second might be the one. But if we look at the real growth play and the value play in Melbourne, and that's what we do at Property Stratch, we look at those areas that are undervalued. And clearly at the moment, in those markets at the start of the cycle, Sydney and Melbourne are the ones that kind of are glaring sort of investment plays or thesis. And so within that, we're looking at kind of undervalued suburbs, and so Melton's probably would be a good value play, but it's more of a momentum play, I'd say, at the moment. So yeah, that's kind of my synopsis on Melton. Any other sort of questions from yourself before I start interrogating you on our next area?
I think we should get to the next area.
Okay, so next area. So we're going to do an area above 700K, and we're going to talk Narre Warren. So over to you, Theo. What are you seeing on the ground there at the moment?
So Narre Warren is in the southeast. So we're directly comparing Melton in the west to the city of Casey in the southeast. We're going to talk about Narre Warren specifically in the city of Casey. But while we're sort of on the broader area, to iterate the population increase projections that you stated earlier, in the city of Casey, there's a population of about 429,000 currently. By 2046, it's projected to be in excess of 600,000. It's important to note here that while there is strong population increase, it's not predicted to be as high as Melton. Narre Warren is a bit more established. It is an older area and there is more established transport and infrastructure in the area. In and around Narre Warren, there's good employment and educational proximity. For example, the Berwick Health Precinct, access to Dandenong South Industrial Area, which I think has approximately 100,000 jobs or so. And there's also a high level of lifestyle and amenity in and around Narre Warren. For example, established parks, schools, golf courses, etc.
So let me ask you a question on that. So I've bought into this sort of argument with Narre Warren. I mean, I think it's a good area. You've got the Fountain Gate Shopping Centre there, which is pretty cool as well. So what asset, if I have a say, what would I be spending for, say, a 3-bed, 1-bathroom or 4-bed, 2-bathroom house, and what should I be looking for?
3-bed, 1-bath, roughly speaking, in good condition is about 750,000 or so.
Yeah.
And for me, I would be looking at a few things. I would be looking at purchasing in a good pocket, so not directly on a freeway or under any sort of obvious obstruction. I would also be looking for a property that is brick and preferably structurally sound. I don't know how else to say it.
Yeah, no. So we obviously talked a little bit about Narre Warren and the type of properties that people like to live in. So we're kind of talking about larger blocks. So is there any other sort of opportunity, some sort of development plays, obviously, with larger type of blocks? Are we sort of seeing townhouse developments, subdivisions happening at the moment?
Absolutely. So to dive into that, typically it's common to come across blocks that are 600 to 800 meters.
Yep.
This has the potential to further subdivide and build duplexes, for example. So you're able to get in, hold it, and develop it later on down the line.
So good land banking plays, if you will.
Yeah, exactly.
Yeah, cool. And I've just been looking at, so Narre Warren, just to put it in, we probably should have framed this at the top. So we're about 45k southeast of Melbourne. And it's quite a desirable pocket, like that whole Berwick, Narre Warren. And I know sort of these areas you're seeing quite a bit of gentrification the further we go towards Doveton and maybe Dandenong. Is that kind of a good way of summing it up a little bit?
Absolutely. Dandenong and Doveton have changed out of sight in the last 5 to 7 years. The people who are living there are changing. So, for example, the median household income is increasing. Our indicators of social housing in and around the area are changing.
Okay.
And the suburb, observably, when you walk around, is changing in profile and in nature.
Yeah. Right, so we just talked about, obviously, a bit of a spoiler, talking about Dandenong and Doveton and sort of like maybe the gentrification place here. But in Narre Warren, it's a little bit different. Like, we've got obviously nicer houses on decent plots. So how do you sort of assess the future sort of potential to Narre Warren, noting it is more popular with owner-occupiers, these type of areas?
So Narre Warren, compared to other new developments in Melbourne, has a few interesting factors to it. The first is it has wider streets and larger setbacks. As a result, the area presents a little bit more upmarket and it's a nicer place to live. This has been noted by the demographic and sort of socioeconomic data that we observe of the people moving there, and that recreates itself and attracts more of the same sort of owner-occupiers because, as the area gets nicer and more desirable, more people want to live there simply. And this is observable when walking around, and it's also now being observed in the data too. As a result, in the last year, we've seen price movement there.
Yeah, no, and I think it's the gentrification play. I mean, it's classic property investing 101. It's kind of what we look for, the ripple effect, but then also those areas that change heavily. And that's the thesis with Dandenong, but Narre Warren, it's just, kind of when you talk about like socioeconomics, like higher net worths, higher household income in the areas, maybe the schools like improving, et cetera, et cetera. We know Berwick has a good selection of schools. So there's a number of these items at play. Is that a fair assumption, something to say?
Absolutely. And if we look at Berwick, which is just next door, a little bit, I suppose, northeast of Narre Warren, that is a nicer area again.
Yeah, it is.
And we can see that area increasing, and that movement is slowly traveling south.
Well, yeah. I think it's important to know that like, the prices in Berwick are quite expensive. It really is a nice area. There's Old Berwick and a few new developments. So something I was quite keen to ask you as well was we talk a lot about data in Australia or whatever it might be. And so there's a number of little tools that do measure this supply and demand imbalance. Now, one of the things that I think is quite interesting, especially when I talk to you, is the actual imbalance when we actually try and get deals or when we talk to agents. So is it possible just to give a bit of intel what you're seeing in that sort of supply-demand imbalance when talking to agents in Narre at the moment?
That's a really interesting point, in particular the reporting and when the data becomes available.
Yeah.
The data reflects the transactions 6 to 12 months ago, whereas talking to the agents now reflects what the market is currently doing.
Yeah.
And to report what's happening in Narre, the ease to obtain something that's good. So something that is in a good state of repair, is in a good area, and is desirable is becoming increasingly difficult.
Yeah.
In addition, more agents are opting to sell on market rather than off market. Off markets in Narre were a lot more common 1 to 2 years ago when there was less interest in the area and they could achieve a better outcome for their vendor. That's their fundamental purpose. Now they're choosing to run most of the staged and well-presenting properties on market, and they're absolutely outperforming the indicated prices. I don't know how many of you look at totality valuations, stash valuations, etc., but Narre is outperforming what the historical data would suggest is the fair price. That is becoming, the new market price. And this is reflected in my interactions with the agents.
Yeah, no. And I think that's an important point, because when you do get those interactions with the agents and we know it was a bit of a cool market, even 9 months ago, let alone a year ago, that sort of when that does play out in the data towards its 6 to 12 months, you were saying, then you will see maybe a 10% move in that time. And so really that intel on the ground and seeing what's happening is maybe the best barometer of what's going on. And then if we look at a couple of data points, and these are going to be lagging as well, but days on market in Narre at the moment is 25, and anything below 30 constitutes a pretty hot market. Hampton Park 27, Narre South 28. And so, in my eyes, that's a hot market now. And that's what we're seeing. If we see a really good investment grade deal, there are going to be multiple buyers agents on that. And there's also going to be multiple, if it's on market, obviously multiple owner occupiers. And it's going to be owner occupiers. That's where we want to be, in those markets where owner occupiers are driving that particular area. And that's definitely one of these areas or Hampton Park as well, where we are seeing gentrification change, but then also sort of owner occupiers out in force. And I think that's a fair summation of things, is it, Theo?
Absolutely. The owner occupiers, in my opinion, are driving the interest in Narre, and that's noted in the inspections and the feedback that the agents are giving from the inspections. Yeah.
And I always think it's quite interesting. You're talking about off markets. If we do get an off market, I know because you're always on my case, but we really don't have a lot of time, because an agent knows if we don't make a decision on something, he can just put it out and a couple of other buyers agents and it'll be gone. And so I think this is what we're sort of seeing in Frankston in December, January, and we obviously know what happened there. We have seen obviously price improvement in these areas over the last 6 to 9 months, as you've seen. And we're talking about this on a lot of podcasts. So not about the short to medium term. We're talking about long-term holds. That's what property investing is. You want to build your portfolio and you want time to do its thing and let compound interest do its thing. So while most people might see, actually that's one last question I will ask you before we wrap up, but it's all about constructing that portfolio and getting high quality assets. So, and the last question I'm going to ask you, so now Warren, I'm talking about a high quality asset, but people might be thinking, especially if they're not a Melburnian, it's 45 Ks to the CBD, but we're in the southeast. How would you respond to that? That kind of question that sort of Narre is a top quality suburb, but you're that far away from the CBD.
I think the need and proximity requirement to the CBD for a lot of Australian cities is changing.
Yes.
Post-COVID, we have the remote work infrastructure and people are in the office less. a lot of people work in hybrid models. They might be in 2, 3, 4 days a week. And so that pressure to be in the CBD every day is no longer there. And also I think there's an observable change in tastes and preferences as well. When you move away from the CBD, you're able to have and be able to afford a larger land size. And we see people prioritizing that as well.
Yeah. No, absolutely. And so, and I also know, just to add on that, you know, the southeast and the east of Melbourne are the desirable places to live, and the whole area sprawls out, and we see some pretty big prices. You can just see it all the way down to the peninsula, Mornington Peninsula. Obviously, I used to live there down in Mount Eliza, Frankston South, big numbers, and then we go inland, Berwick, and these places. So like, while we do see 45Ks from the CBD, you have that remote hybrid sort of situation where, you know, the travel's not too bad going to the CBD, especially if you're doing 2 days a week. Obviously got New Station as well, level crossing, work that's happened in Narre Warren, so it's easy to get in. But we're in an area which is very desirable to live. And I see good things and big things for Narre Warren. So thanks, Theo. If we just wrap this up now. So, you know, our episode in our series where we're talking above 700K, below 700K in Melbourne, started off with Melton. It's been on a number of radars, been a lot of podcasts where we've talked about various areas in Melton, sorry. It almost rhymes with Melbourne, doesn't it? So hopefully that's helped, and we still see value there. And then we pulled that to another area sort of above 700,000. I think the median's about 780 in Narre Warren, there or thereabouts, where it's going to be a good long-term set and forget play. I think we're still looking around the sort of 4% yield mark in Narre Warren if we're quick. But I think, you know, if you're looking for areas to invest in Melbourne, and depending on budget constrained, and if you just want a couple of assets just to set and forget and hold for, like, you know, 20 years or so, I think you can go too far wrong with Narre Warren. If you want to scale that portfolio or you've got a lower sort of budget, I think Melton still does hold pretty good value. But you certainly have to be quite quick with Melton because it's changing every week and prices are going up. So been a pleasure. Thanks for coming onto the podcast again, Theo.
Thanks for having me.
Enjoyed the insights with Narre Warren, and look forward to catching up with yourself on one of these very shortly.
Exciting.
Thank you.